LendingClub stock is up 10% after they reported their impressive earnings. LendingClub is at $18 at the time of this recording. Now, 2 years ago, we did a video for this company under our high risk, high reward series of videos. As you all know, our first high risk, high reward stock was SoFi at $8. The second was Meta at $99. The third was New Holdings at $4. And Lending Club at $7 was the fourth. Now, the first three became multi-baggers now with at least a 3x return. The question is there still opportunity for Lending Club as it more than doubled from the $7 stock price? This is what I will cover in this video. Guys, before I move on, I'm gonna ask if we can help me get to 100 likes for this video. Smash that like button. Let's get to 100 likes. Subscribe to the channel and let's continue growing together. Please note this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Lending Club. In full disclosure, I do own 500 shares of Lending Club at under $9 stock price. I used to own options, but I closed all of them out. Now, let me give you a quick refresher. Lending Club is a bank with more than 5 million members. It originated more than $100 billion in loans. The net promoter score is 81, which is astounding. Let me now show you a snip of the recent quarter earnings. Revenue was up 32%. Loan originations were up 37%. APS is up 185%. Now, for comparison, SoFi's EPS for entire 2025 is much lower than this number. Deposits are at a record of 9.4 billion. Efficiency ratio is up 6 points year over year due to the AI-driven cost control. They launched a product called Level Up, which is yielding an impressive results. Even though this is a personal loan lending company carrying high risk, I like their discipline. They take less risk and have amazing underwriting skills. They post profit for almost past 10 quarters in this tough economic environment. Their delinquencies percentage is much better than their competitors. Let us now look at their Level Up checking account results. They designed this product to deeply engage members. Since the launch, Level Up checking has driven 7x increase in account openings over prior product, with nearly 60% of those coming from borrowers. Level Up saving customers visit them average 9 times per month, which is a 30% increase over prior savings product. So the question is, what is the valuation for 2030 for Lending Club? EPS estimate for this year is $1. For 2026 and beyond, once macro environment gets better, I can estimate $3 to $4 in EPS by 2030. Now, of course, this is my estimate, and there is no backup for this. I am counting on their careful execution coupled with better macro to end up with $3 to $4 in EPS. Now, banks usually either trade at a book value of 10 multiple, but I am assigning a 15 multiple for Lending Club to give credit to their fast growth and flawless execution, with which they can get to a stock price between $45 to $60. Currently, they are at $18, so I'm looking at about 3x return at the midpoint from the current price of $18. Now, personally, I would still buy the stock at this price, but this stock is not as popular. This stock has also been volatile, so I think there will be opportunities to buy the stock at under $15 later this year or early next year. Now, since I have 500 shares of under $9, I'm not buying Lending Club anymore. But in my opinion, a small position at $18 does not hurt. Also, I would dollar cost average if it falls below $15. Now, I would not exceed 3% of my portfolio for high risk stocks like these. Remember, risks are obvious. This is a lending company, and the bad wave of delinquencies can wipe out this company. This is why it is a high risk investment. Don't forget to smash that like button. Let me know your thoughts in the comments, and thank you so much for watching.